Time now for a look at the day's top business news, and I'm joined in the studio by Brian Quinn. And you're starting, Brian, with a visit to Australia by China's number 2 official as the country seek to repair damaged trade relations.
And Chinese Premier Li Qiang is in Australia for a 4-day visit. It is the first such visit by a Chinese premier in 7 years. Li and Australian Prime Minister Anthony Albanese are working to put an exceptionally hostile era behind them after a series of diplomatic and trade disputes sparked by the COVID pandemic. Tom Canetti has the details.
Years of political tension sparked during the pandemic and further fuelled by Australia's military alliance with the US. China, Canberra's by far largest trading partner, has begun lifting trade restrictions that have blocked billions of dollars of Australian products for years.
Obviously, this is such an important trade relationship. Last year, we had over $300 billion worth of two-way trade. We're here at Penfolds because, of course, one of the impediments that has been removed is the export of Australian wine, and we welcome that.
And following Chinese diplomatic traditions, Premier Li Qiang visited a zoo in Adelaide, hosting a pair of pandas on loan from Beijing. But perhaps more exciting for Australian traders is the prospect of reopening exports on mineral, barley, wine, lobsters and other products. Li will also visit a Chinese-controlled lithium processing plant in resource-rich Western Australia on Tuesday. Australia produces 52% of the world's lithium, and Li's visit underscores China's interest to invest in the critical minerals it uses for electric vehicles.
I sincerely hope that during my current visit, I will work with you to build a more mature, stable and fruitful, comprehensive strategic partnership between our two countries, to deliver more benefits to our two peoples.
A sign of positive things to come.
Meanwhile, China's struggling real estate sector continues its troubling decline. The country's National Statistics Bureau says 70 large and medium-sized cities saw prices fall for both new and pre-owned homes for the month of May. The country's residential property market has cratered in the wake of stricter debt policies imposed by Beijing, with a number of top developers, including Evergrande and Country Garden, defaulting on their obligations. Commercial real estate in trouble too, with new office space sales down more than 20% on an annual basis for the year up through May. Property development overall is down more than 10%. The sector once accounted for nearly a quarter of the Chinese economy. Officials say recent policy moves to prop up that market will take time before their effects are seen.
Judging from the data just released, the year-on-year declines in the sales of newly built commercial buildings and the floor space of buildings newly started in the January to May period have narrowed. However, it should be noted that it will take some time for policies to show the effects, and the property market remains in the process of adjustment.
Let's get a check on the day's trading action now. Asian indexes were in the red on Monday as investors took in the latest Chinese economic data. Retail sales there did manage to beat expectations in May, with demand for offshore assets helping to limit losses in Hong Kong at least. The Nikkei in Tokyo, though, down nearly 2%. European indexes, meanwhile, are struggling to stay out of negative territory on Monday following big losses last week. Paris's CAC 40 lost more than 6% last week after President Emmanuel Macron's decision to dissolve the National Assembly and hold new parliamentary elections in the wake of big gains by the far right in European parliamentary elections. Investors, though, are also looking ahead to the next interest rate decision from the Bank of England, which is due out on Thursday. The BOE largely expected to wait until September to cut its rates, which are currently at 5.25%. Next, millions of Muslim faithful are gathered in Saudi Arabia for the annual Hajj pilgrimage, which goes until Wednesday. One of the 5 pillars of Islam, Hajj is a major financial windfall for the conservative country, which is trying to develop its tourism industry, both religious and otherwise, as part of a drive to reduce its dependence on crude oil exports.
The most sacred Muslim pilgrimage, and also a pillar of Saudi Arabia's growing tourism industry. The country plans on spending $800 billion on the sector over the next decade, as it looks to diversify its economy and reduce its dependence on oil. Almost 2 million tourists perform Hajj this year, boosting traffic for local businesses.
The trade movement is excellent. Pilgrims are purchasing gifts from the Holy Mecca, one of the purest parts of the earth. They are buying it for the sake of blessing. They have everything, and the same in their countries, but they are trying to get the blessing of the Holy Land.
Hajj and Umrah, another pilgrimage in Mecca, brought $12 billion in revenue to Saudi Arabia in 2019. And with religious tourism key on the country's agenda, that figure is expected to grow.
Thank God it's flourishing. Before Hajj, the turnout of visitors was good. Especially in the past 2 years, the visitors were huge in numbers. As an employee, I have been here for 18 years in the market around the Holy Mosque. The trade movement now is different from the past.
Saudi Arabia is investing in a range of sporting events, museums and heritage sites to boost tourism. Its goal is to have 150 million tourists per year by 2030, with about 70 million coming from abroad.
Finally, for business, cigarette, liquor, and now Instagram. The U.S. Surgeon General says he wants to force social media platforms to include warning labels that they are potentially harmful to health. Specifically, Surgeon General Vivek Murthy says platforms like YouTube, TikTok, and Instagram are dangerous for teenagers' mental health. In an opinion piece for the New York Times, Dr. Murthy noted research showing that teens who spend more than 3 hours per day on social media run a significantly higher risk of mental health problems. Recent surveys, meanwhile, show that the average American teenager spends nearly 5 hours per day on social networks. Nearly half of the teenagers polled say that those apps make them feel worse about their bodies. There's been plenty of research showing dangers to teenage mental health from social networks, and that it's important to note that while Dr. Murthy wants to put these labels on, he will need Congress to actually pass laws to do so, and as of this moment, there are no such laws in progress.
Yeah, all I keep saying, Brian, is thankfully there was no such thing like social media when you and I were
I
teenagers.
can't even imagine growing up with it, honestly.
Terrifying. Absolutely, and especially for young women and girls. Very
No doubt.
dangerous indeed.